This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, April 20th, 2015. Euro dollar. So the euro has entered a bit of a correction over the past several days, with the market rallying out from those lows that we saw back in March at 104.62. Those were 12-year lows, and the market is now settling into the middle of a range between 104.62 and 110.53, the high that we saw back on the 26th of March. At this point, the downtrend remains firmly intact, and the market is expected to continue within this downtrend and put in a lower top somewhere ahead of 110.53, ahead of a bearish resumption back below 104.62 and towards parity further down. Really, only back above 10.53 would delay the bearish outlook for the euro. Sterling dollar. So cable has seen a nice correction following the breakout from multi-year lows that were set the other several days back at 145.65. And the market could now come into some stiff resistance into the 151.65 area, or ahead of 151.65, that high that we saw back on the 18th of March. At this point, the downtrend remains firmly intact, and the market should look to put in a lower top ahead of a bearish resumption back below 45.65 and towards 140 further down. Really, only back above 151.65 would delay the bearish outlook. Dollar yen. So dollar yen continues with its consolidation, and the market continues to be very well supported on dips towards 118, and a break back above 122.03, the 7-year high that we saw from early March, would be required to extend the strong uptrend in this market towards the 125 to 130 area. Until then, look for dips to continue to be well supported into the 118 to 117 area, while at this point only back below 115.55, the low that we saw back in December of 2014, would really compromise the bullish outlook. Euro Swiss. So Euro Swiss has been under pressure over the past several weeks since recovering up to a high of 108.15, and the market is now looking to test some previous resistance now turn support from January at 102.50. At this point, we're going to have to wait and see how the market responds to the 102.50 area. We could see a bounce out from this level in favor of a continuation of the recovery out from those critical lows that we saw back in January, or a close below 102.50 would open the door for an acceleration of declines back towards parity. So it's a bit of a wait and see here with Euro Swiss, and we'll have to wait and see how the market responds to 102.50. Look to see if the market closes below 102.50 or is able to hold above 102.50 to determine the next clear directional bias. Aussie dollar. So Aussie has been enjoying a nice little recovery out from multi-year lows that were set recently at 75.33, though the downtrend remains firmly intact here, and the market is continued to be expected to be well capped ahead of that high that we saw back on the 24th of March at 79.38. At this point, only a break back above 79.38 would compromise the bearish outlook. Dollar CAD. So dollar CAD has seen a bit of a interesting development or a twist in recent sessions after taking out last week that critical support at 23.50. The break of the support doesn't negate the broader bullish outlook, but it does delay, with the possibility now for deeper setbacks towards a measured move objective around the 119 area. However, a higher low is still sought out on a medium-term basis ahead of a bullish continuation, eventually back above the 5-year high that we saw back on the 18th of March at 28.35 and towards the 2009 peak at 30.65 further up. Kiwi dollar. So the New Zealand dollar has been trading with a bid tone in recent sessions after the market rallied out from support several days back at 71.76. Although the downtrend you can see here is clearly intact, and the market would need to take out 78.90 at a minimum to start to compromise that downtrend. So as such, any additional gain should be very well capped in this market towards 78, with a lower top sought out ahead of a bearish resumption back towards those recent range lows and multi-month and multi-year lows at 71.76. SPX 500. So the S&P 500 continues to chop around just off those record highs from February at 2120 and is showing signs of a potential top. But at this point, we're going to need to see a break below 2040 to really confirm. That's the low that we saw on the 11th of March, and a break would do a good job of confirming a topping structure and accelerating declines back below 2000. Until then, the top structure is intact, but the pressure still remains on the top side if the market can't take out 2040, and there is still risk for a break to above that recent record high from February at 2120. If we do see a break and close above 2120, that would open the door for the next major upside extension, potentially towards the 2200 level. Gold. So gold has done a good job of being very well supported on dips in recent sessions and looks like it wants to be putting in a higher low ahead of that low that we saw back on the 17th of March that stalled out ahead of that critical 2014 base at 1131. The higher low now looks to be wanting to be put in around 1178, that low that we saw on the 31st of March, and this will be confirmed on a break back above the high that we saw on the 6th of April, which comes in around 1224. A break and close above 1224 will open the door for an acceleration of gains, potentially back towards 1300, and will really do a good job of strengthening this longer-term basing outlook for gold. That's all for now.